Good day folks and welcome to Best Trade Setup. In this video I'll be going over the trades from the 6th to the 7th of January 2025. So here we have our first chart. What I usually do, I go through the before, the after, and then the chart analysis to show you what exactly was I looking at to make this trade. Here's the after. Here's a wider picture. Now with me, most of my trades I go for a 1-to-1 risk to reward and then I call it a day, or I could take 70% of the profits and leave 30% running at break even. Here's the chart analysis. I bought here on the 5-minute time frame. This is a 15-minute time frame. This purple box here is a no trade zone. When I trade during the London session, it's a 3-hour window. When I trade during the New York session, it's a 3-hour window. So between these two windows, New York and London, is 3 hours. Now the middle hour of this 3 hour is the no trade zone. I noticed that most of my trades, they don't work out when I take them during this time right here. Now here's a 5-minute time frame. What we have is this 5-minute order block. Now the yellow lines are order blocks. The one that's written OB is the 15-minute order block. And then the one that has no label on it is the 5-minute order block. Now I have this level right here above the 5-minute order block. So in this situation, I look for 5 confirmations. Any other situation, I look for 6 confirmations. So what we have here is this fake out. Price closes below and then back above. Now with every fake out is a W pattern, what is also known as a double bottom. So we have 2 confirmations so far. So this fake out is in the form of a triple bottom if you look at the line chart, because we're going down, up, down, and up again. So those are 3 confirmations. We have price tapping into the 5-minute order block. That's 4. And we have these 4 candles right here. If you start right here and close it here, it's a pin hammer. So these 4 candles form what I call a 3CP, which is a 3-candle pattern. 3-candle pattern, which is also known as a morning star or an evening star pattern. I'd have an exception of 4 candles, but not more than that, because it does form the pin hammer when you start here and then you close right here. This would just form a huge pin hammer. And then finally, we have price closing above the 20 EMA. This is the entry signal. Now, as you can see, this red dotted line symbolizes a break of structure on the 15-minute time frame, and it forms a 5-minute order block. I usually don't buy leading into an order block, but I've seen over time that if you have sort of like a consolidation and price does this fake out right after the consolidation, it's as if price is gaining fuel to go through this order block. Other than that, usually a peak formation low followed by a consolidation with a close above the consolidation, that's when I'll know that price is most likely to reach the other side of the order block. Here's a wider view of the chart where we bought here. Price eventually went all the way up there. Like I said here, no trade zone, but there is the confirmation of buys in this area. Now this is the confirmation I was talking about earlier. It's the second trade, but TNT means trade not taken. I didn't take this trade because 1, no trade zone, and 2, we'll be buying into this order block right here. Price did eventually work out, but I'm sticking to my rules, no trading during this time. As you can see, price did reach the take profit area. I will discuss what makes this a valid buy, but like I said, I didn't enter this trade. We have a sweep, and with every sweep is a W pattern. We have a 3-candle pattern right here formed by 4 candles. If you start here and end here, we have a pin hammer that's been formed. Price then taps into the 5-minute order block and then closes above the 20 EMA. Also, as you can see right here, this level right here, price does a sweep here, goes up, and then comes back down and then up here. This in itself is a huge W pattern at a break and retest level. So since this is a no trade zone, I'm not going to enter this trade, but it is validated by these confirmations that I just stated. but because it's in this area this time, I won't trade it. Here's a closer view. Like I said, if you open up here and close here, it just forms a huge pin hammer. Now price does continue going up, and still in the no trade zone, we do get this three candle pattern a in the form of four candles rather, which is an entry signal in itself because we've already confirmed buys all the way here. So this three candle pattern entry would be valid, but because it's a no trade zone, I won't enter it. And as you can see, price did go beyond the stop loss level. Now we are entering this hour before the 3-hour New York trading window. And as you can see, price did close below this level, the stop loss level, and close back above it in the form of a W pattern. This right here is a second chance entry trade. So yes, you can enter right here for a 1-to-1 risk to reward. And there you have it from here to here. Stop loss somewhere around this area. So my second chance entry trades are when, let's say I have an entry such as here, and then price goes beyond this stop loss level, but then it forms a W pattern or a three candle pattern at the stop loss level. That is a second chance trade entry. Now this is just a wider view of price. As you can see, our buys here and then all the way here and there. Now on the 7th, there is a setup that I want to introduce on this channel. It's called the 3-push trade. When price breaks out of a level here, as you can see, this is the 5-minute chart, but this is a break of structure on the 15-minute time frame. We have this push right here, 1, pull back, push right here, 2, because as you can see, the candle and the wick of this candle body are above here, so 2, and then another pullback, 3. So when we have this break of structure, either to the bottom or the top, we start counting 3 pushes up. And whenever we see a retest in the form of a 3 candle pattern or W pattern at a significant level, that is an entry signal. Regardless of the fact that now we're at the high of the day, price most likely is going to give you a 1-to-1 risk to reward trade. Here's the after of the trade. Here's a wider view of the chart on the 5-minute. These pushes are counted on the 5-minute, but you start counting them when a break of structure happens on the 15-minute time frame. So this is the 15-minute time frame, as you can see right here, break of structure to the upside. So now we have 4 inside candles in this candles range. So when we have a minimum of 4 inside candles, I now draw my break of structure points, where if price crosses below or above, these are valid break of structure points forming order blocks. 4 inside candles here, 4 inside candles right here. Now an inside candle, to me, has to be within this candle's range. Even if it's on the same level, if the wick was on the same level as this wick, I'll still count it in as an inside candle because it didn't cross beyond that wick. Here's a label chart of all the things I was mentioning earlier on. First push, second push, third push, 3 candle pattern in the form of 4 candles. Entry right here, price did do a pullback but didn't cross the stop loss level and then gave us at least a 1-to-1 risk to reward. With this trade, I always aim a 1-to-1 risk to reward regardless, but you can always close partials and let the rest run beyond that TP1 level. Now this brings me to the end of my video. Take from that what you will, and I'll catch you all on the next video. Till then, cheers.